It's Monday. That means it's Setup Monday here at Brave New Coin. Let's talk about the things I'm watching this week as we sit here in another zone of consolidation for price. So one of the simplest things that most people intuitively watch anyway are gas prices. And in general, if these spike or remain high, there's a ton of activity on chain for ETH, right? If they remain low or near zero, then that means there's near zero activity. So this will be one of the first weather vane indicators, canary in the coal mines, whatever you want to think of it as. If this goes up at all whatsoever, that should be your first indicator that, okay, there's clearly something brewing here, not only on DeFi, not only on ETH, but generally in the ecosystem collectively. Something else to watch is the ongoing saga with Chinese miners as far as what policy pushes them out of China, away from those key regions in that area. And one of the biggest indicators that we can actually measure is the next difficulty adjustment. So if this goes double negative, if this goes positive, that'll tell you how safe miners feel versus how in trouble they are in reality. Because if they have to pull hash rate off, BTC in this case, then that says that miners are moving or getting off the network. If this goes positive, that likely suggests that miners have moved elsewhere successfully, not in China, something like that. So I'd watch this as an indicator as well. I don't know how this will affect price per se, but if price drops, we'll see a drop in hash rate. We always do anyway, but this is a pre-price action indication of what's going on in China. So ideally, if this flips positive, then the Chinese pressure on miners may be abated in the near term. But right now it sits at around -7% after -16% the week before. So lots of volatility still in those difficulty adjustments from 2-week period to 2-week period. Now, this is BTC open interest, something else you can watch as a soft indicator as far as, do people feel like the market's coming back? Are they nervous to jump back in? Is everybody still wrecked? Is retail wrecked? Are people just done, right? If OI continues to decrease, then generally that's bearish along with volumes. Now, if OI is declining or flat while price is basically flat, then you sort of expect that. Same thing with volume. Volume is virtually zero right now because nothing's happened, right? But as soon as something starts to happen, then volume will pick up, OI will pick up. If we drop below these ranges and OI increases, that suggests bearish momentum, bearish strength. So just to temper expectations for price action here, let's look at some high time frame trend indicators. Very simple. Look at the 20-week EMA in this case. Compare it to 2016, compare it to 2017. If we look historically, if we're above it, we're bullish. If we're below it, we're bearish. It's a really great litmus test for saying what's going on here. We typically don't perambulate around it. It's, for the most part, above or below for extended periods of time. So we're currently below. My expectation here isn't that we magically pop above. It's that we are probably going to stay below for quite some time. So that would definitely be bearish. We're below the 200-day moving average together with the 20-week. Says we're not in Kansas anymore. We're not in bull territory anymore. Certainly this isn't 2016. This isn't 2017. This looks different. Definitely. I don't expect any of these outcomes to look similar at this point in time. We had a chance to support at these levels and we didn't. And you have to change your mindset because trend is no longer bullish. Not only that, but we will get a bearish death cross, 5200 cross. Historically, these haven't been great indicators for a short entry, but keep in mind that there's just piling evidence that trend is continually flipping more and more bearish as we go along here. This is the 4-hour, and you can draw a pitchfork on this, and it's not up, it's definitely down. So another piece of evidence that this is bearish expectations. This is not full recovery by the dip mode for me, at least. Everything that I'm seeing does not look buy the dip worthy. The pitchfork likes extra bearishness below the median line here and some bullish recovery potential above the median line. So we're still above the median line. So that's good. Now we're approaching a zone below the 4-hour cloud along with being below the median line of the pitchfork Again, I'm just adding evidence here. This looks bad. This looks bad. This looks bad. If we look at just the daily structure, a down move with a consolidation that is essentially an equilateral triangle should lead to further bearish continuation. Volume isn't on here, but volume is basically confirming that this is definitely a consolidation pattern because volume is in a declining profile. So any lower low, I mean anything that's any lower low below 34.5, that's it. You know, I'm prepared for 20K at that point because that tells me high time frame metrics are bearish, low time frame metrics are bearish. We tried to consolidate and failed. We broke down. You know, you can't get bullish there. You can't get by the dip mode there. Now, is it possible for a fake out, Darth Maul, blah, blah, blah? Sure. But that isn't where my mind is for sure. You know, it's bearish. Okay. If we break down, if we break lows, that's it. You know, I'm not going to be a hero and start buying knives. One thing that the cloud is telling you here that may save this is that we are pretty oversold currently, and we're forming this TK C-clamp where the Kijun hasn't moved yet. You know, we get this quick move and then sideways, so it paints this 50% fib basically from high to low. And as we potentially break the Tenkin, currently we're still below it, but we could break above the Tenkin and then we have permission to be bullish for a mean reversion to 48. So I'm definitely not high time frame trend bullish, but I'm ready to range trade this to 48, 45. You know, that's a decent upside, right? That is a diminutive branch on the decision tree, but it's not non-existent. So there's definitely a non-zero chance that we could pull up back there. And if we compare this to some other similar type of stuff, this was 2015. You know, if we're looking for fractals, this was actually more bearish because it was kind of a descending triangle. This ended up breaking up. We ended up being okay here. This was the beginning of that legendary 2016-2017 run where we formed an ascending triangle for 250 days. You know, that's something we could be setting ourselves up for here, as well as ETH-BTC, which I'll look at in a second. Just a massive multi-month consolidation. Something else that I haven't mentioned on this daily chart or weekly BTC chart is this head and shoulders possibility, which everybody's watching as well. So even if we make it to 48, there still remains a possibility that we end up breaking down anyway, because this looks shoulder, head, shoulder on high time frames, that it wants to go lower. So there's so much technical damage here for any bullishness. It's going to take a momentous effort over probably 3 months to do anything. Something else worth noting on this example, this was another ascending triangle through 2018, early 2019. That took a tremendous amount of time, right? This was tons of technical breakdown here, bearish momentum, falling wedge, Adam Eve, eventually resolved as an ascending triangle, but that took a long time to figure itself out. Not only that, but it waited until basically the day of the quarterly rollover. And we're currently 23 odd days to the next quarterly rollover. So we may just do a bunch of nothing like we did in March 2019 until the quarterly rollover. And we're hoping that it's bullish, right? So Q3 historically has not been bullish. Something else to watch is the yearly pivots. We're below the yearly pivot now, which is not bullish. The next one down, 20K. There's that number again. Bollinger Bands getting tighter and tighter and tighter as they usually do on any sort of consolidation period. Again, another way of telling you, hey, there's some technical evidence here. Hey, trader. Hey, you. There's some technical evidence here that if we break below 34, then you get a Bollinger Band breakout to the downside, along with this triangular resolution where this pattern completes to the downside, sort of as expected. Flipping gears to ETH. ETH looks decently okay here, but my problem with being bullish ETH, bearish BTC is historically in any bear move, everything correlates, right? Bull moves will happen with various ferocity, strength, exuberance. You'll lose correlations, but typically, especially in crypto, once things are bearish, they're all bearish together. So in a vacuum, this chart still looks fine. It's still above the 200 daily moving average. No threat of a 5,200 death cross, nothing like that. I don't have it up currently, but I believe it's still above the 20-week SMA as well. And this ascending triangle case with volume, again, looks way stronger than BTC does here. This is very reminiscent of this ascending triangle on the daily, which looked great at the time, traded as expected. Again, you have your Adam and Eve potential that didn't break up. Now you have a W on low time frames. So both of these are waiting for something, right? Whether it's the end of the month, whether ETH will move first and then drag BTC up with it. These should move together because they're both waiting on something. So it's unlikely that high caps don't move together here, and they probably move within the week. What you don't want to see is this just zero out to the nth degree, because typically when you see patterns with a bias that don't break within the 3/4 fill, they typically fail because people are waiting, right? People are waiting, nothing's happening, waiting. They're like, okay, I guess it's not happening. We're going to dump now, right? Because the expectation here is bullish reversal, bullish recovery, whatever. Again, you're looking at this yearly pivot at 3K, downside's 15 or lower. You know, it's kind of that simple. I don't like these numbers either, but it's just what it is. But expectation here is much more bullish for ETH. ETH-BTC has broken up much like you'd expect this chart to break up. Same thing, Adam Eve, ascending triangle, whatever you want to call it, on this yearly pivot, on the pitchfork, diag, just consolidated, broke up. This is what you want to see for ETH, for BTC, when it's consolidating around key support areas. You don't want to see any lower lows, right? Here's the weekly ETH-BTC. Now, do I think this would pull up significantly beyond the diag of the pitchfork, beyond the yearly pivot? I don't think so. Can ETH outperform BTC in a bear market? I also don't think so. Typically, when you see alts that are bearish, they outperform to the bear side versus BTC, just as things kind of went bearish a few weeks ago. Alts typically do best when BTC is sideways. So that's the best case for ETH-BTC, is for BTC to stay sideways in nothingville limbo while ETH pulls above that ascending triangle level. So it's very much chicken and an egg situation, very touch and go with ETH and BTC. Some of these alts, this is the DeFi perp index, which I've been just using as a indicator for collectively what's DeFi look like. Some of the DeFi charts have broken up already. Curve has, 1inch has. If you compare those charts, those fractals to the BTC and ETH dailies, those are the expectations for some of these moves to the upside. You know, there's plenty of examples. ETH, BTC, same thing. This is also the chart you expect to move up if this behaves like an ascending triangle, which it should. It has a very specific horizontal resistance along with the 50 and the 200 resistance here, definitely within the VPVR volume range, which you can just see if you draw out as horizontals here. So we're kind of in the middle of the multi-month range that we've sort of been stuck in. Trend metrics are telling you be careful that this is flipped bearish for the first time since November, but alternatively, you could say maybe it's reset the trend completely. Had this super strong January and then a bunch of nothing really throughout February, March, April, May, and it's potentially getting ready for another move, right? You got to wait. This is a wait and see. If you like gambling, right? If you're a gambler, take a max size position right now and hope you're correct. But if you're a trader, you're going to trade the breakout. You're waiting for confirmation. I think that's where most people are sitting right now. But, you know, if you want to gamble, go 100x this somewhere. Be rich or wrecked very quickly, because we're probably going to get moves on this stuff within the next week or two. And BTC could probably just go sideways forever. The other thing about this weekly chart, kind of reminiscent of 2018, 2019, again with that ascending triangle. But, you know, this I can't expect this to break up, certainly. Lastly, I'll just mention the DeFi portfolio and the ETH-BTC fund on Enzyme. And I'm trading this exactly like I'm analyzing these charts in the video here. You can see how I'm positioned. You can see AUM. So I'm currently 60% crypto, 41% interest-bearing USDC on Aave. You can see all the trades I make and win. You can see the deposits. You can see all that stuff. But if we start to break down on BTC I'm allocating out of BTC, for example. I'm allocating out of ETH rather quickly. And the same thing goes with this DeFi stuff. If we start breaking lows, that's it. I'm not going to hang around for potentially sort of double or triple bottoming on any of these horizontal ranges, because the expectation certainly isn't bullish. But you can see some of this stuff in this DeFi portfolio has done okay over the past couple days. Curve, like I mentioned, has done well. Aave doing okay. But collectively, everything's sort of flat over the past couple weeks. And this is non-custodial portfolio management, so you can deposit ETH or USDC, and then that allows me to basically use those funds for copy trading type of activity in the smart contract. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.